Hi guys, in this video I'll discuss our open and close trades for the week and also discuss what lessons there are to be learned from the Gamestop saga. Hi guys, hope everyone's safe and well. As always, please remember that the contents of this video is my opinion only and it's not to be considered as financial advice in any way. Okay, before we jump into the trades for the week and the new positions that I've opened, I'll cover off the stats for the week and then quickly run through the news that's affected the markets this week as well, paying particular attention to obviously GameStop and the US stimulus package that looks to have been agreed. So just to quickly cover off the stats. So we're progressing well. I mean, I think a lot of people are pleased with how the year started, but obviously it doesn't stay like this forever. So we do need to be cautious. But currently we're up 15.83%, 7% or just over 7% for February. My target for the year initially was fairly modest. I set that at about 20 to 30%. So obviously, you know, we're 6 weeks into the year and we're 3/4 of the way to that already. So let's see how things go. You know, targets can obviously be broken. They're there to do that. So hopefully we keep progressing well, and let's see how we get on. So if we quickly cover off the closed trades for the week, there was only 3, which gave us a realized return of 0.60%. A small position in Amazon closed out at just under 6%. Biogen was closed out just over 6%. And then Zhong'an Online Insurance, which is a Chinese company, we closed out just under 35%. So fairly good trades, only 3. We did open some new positions, which I'll cover off shortly. Before I do so, I just wanted to cover off the news really for the week, and what's been happening and how it's affected the market and how it's affected the portfolio. So obviously last week there was, as you'll probably know, there was a lot of talk about GameStop and some of the other sort of pumped up legacy stocks like AMC, BlackBerry, Nokia. So I alluded to it last week that, you know, there was this battle going on between the sort of average investor and the big hedge funds. There's only ever going to be one winner. You know, I think you're starting to see the inexperience of a lot of new traders that have come into market and essentially been mesmerized by the money being made by a small amount of people and posted on Reddit. Now, I understand that there's a movement. You know, there's a lot of people that are trying to buy into this movement against the little guy, against the big guy, the big banks. But one quote, which I think is really sort of quite, it's harsh but true. When it comes to investing and it comes to business, essentially, if you want a friend, buy a dog, because you can listen to, you know, what people are saying online. But essentially everyone's out for themselves. You might think that you're part of a movement, but what you've got to realize is at the end of the day, it's your money, your money to lose, your money to invest. So make sure you remember that. You know, by all means, if you want to get involved in these, you know, these sort of frenzies as they were, then it's completely up to you. But when you sort of look on the GameStop page, and all this week, you know, I mean, just quickly, if we look at the chart of GameStop, this is the weekly chart. So obviously we saw it run all the way up to just over 300. And then this week, it's just absolutely dropped like a stone. And I imagine that will just carry on dropping. Probably might have a bit of a fight back, but then it will just carry on dropping. For 3 reasons, really, for me. One, people will run out of money because, you know, they're essentially, the majority of people will probably be inexperienced traders and investors. So, you know, they're probably going to get stopped out in the volatility. They'll probably lose money. And if they are still holding, they won't have any more money to pump into it. 2, I think you can already start to see it, especially on Reddit. A lot of people are sort of jumping between stocks. So right at the initial outset, it was right, everyone going to game because this is this is our standard. This is what we're making a statement with. And, you know, no qualms about the statement that they're making. But now I think what you're seeing is it's actually diluting. The group movement is being split up and people are focusing on other stocks and trying to run up those stocks, thinking that it's just a case of if we all just jump on this stock, it will make us loads of money. I think the movement and the the agenda of what was part of that movement is being lost. And I think that then the less volume of people that you have behind that, it loses its traction, which is why you're just starting to see, one, people losing money, two, people jumping and taking their money they have made into other stocks. And then also three, I think you're just getting people that are actually were just in it for a quick buck, and they realise that actually they're going to take their money out. So not to mention obviously the hedge funds that I think I saw a quote, sorry not a quote, I saw an article that a lot of the hedge funds have obviously been jumping into this volatility, and just basically ripping the money away from these new investors. One company, one hedge fund made about 700 million on one trade, I think. So like I alluded to last week, this sort of volatility is where hedge funds make big bucks. So whilst you can applaud the movement and the intention, you've got to remember that every trade you put on is your money. So make sure you do your due diligence, make sure you understand what you're investing in, because at the end of the day, it's your money to lose. And just going back to the page, all I've seen this week is these sorts of questions. And this is, I'm not individually picking anyone out. This is, if you look on the Gamestop feed on eToro, you'll see it everywhere. Where are we? I bought Gamestop at 75. What should I do? What sort of investment decision can you make if you're asking random people for that sort of advice? I'm going to lose my share to margin call because I don't have any money in my account. Something about liquidation. What is this bullshit? So again, people that don't understand what they're investing in and are now getting margin called on the trades that they're making. Bought at 80. What do you think? For me, and I've posted, a few responses to people on not just on GameStop but on other stocks as well. Completely understand eToro is a social platform and it's fine to seek opinions of others and try and learn and take advice. But if you're opening a stock and you're using your own money and you're not doing your due diligence and you're not comfortable with that stock, then you shouldn't be doing it. End of, in my opinion. You're essentially gambling. So yeah, do your due diligence. If I could say the word properly, do your due diligence, because then if you have done your own research, you will then become more comfortable with the stock that you have invested in. So, and you've not got to seek guidance from people that are essentially strangers on eToro. They could have the best wishes in the world, but an analogy that I used with a comment I posted on someone's the other day. Would you stop someone in the street and basically hand over your money to them based on the advice that they would give you, having never met them previously? No, I don't think you would. So this is essentially the same thing. You're putting, should I buy, should I sell, should I hold? Joe Blogs on the other side of this comment, you don't know them. They could be anybody. They could have a vested interest in that stock going down. They could have a vested interest in it going up. They could have no clue. So at the end of the day, for you to be comfortable with the money that you're investing, you need to do your own research. And if you don't want to do your own research, then there's more than enough people on eToro that are popular investors that take this very, very seriously, myself included. You can copy their trades, even at the start, just to learn, learn the ropes and learn about what you should be looking for in particular stocks. But I just worry that this whole essentially pump and dump sort of culture, and reading stories of people, people making 50 grand into 50 million on GameStop, is basically pulled in a load of new investors that think that you can make a quick buck, and it doesn't work like that. Eventually people will get burnt. So be comfortable in what you're trading. And if you aren't, then copy someone that is, because then you can learn from them. Anyway, that's enough about GameStop for now. That's, I think, where there are some lessons to be learned and why I think new traders just need to be a bit careful. Another reason the markets, I think, have done well this week is because of what looks like potential or pending $1.9 trillion worth of stimulus, which I believe on Friday morning was approved. So it just needs to go through the final few steps, I believe. So I think the week jobs report, US jobs report on Friday, probably aided the fact that the market's done well, because then that means that the higher figure for the stimulus package would be needed. I think people were, or a lot of people were worried that if the jobs report come in a lot stronger, that so much stimulus might not be needed. So I think that unemployment rate and the low or the weaker than expected number of new jobs created a bit of a boost for the market, because then they feel that, or it feels, the general feel even, is that that 1.9 trillion stimulus package will now be bought in. Now, this is, I think, almost a case of buy the rumor, sell the news, because obviously the markets have been boosted by this news because they think that the stimulus is coming in, and S&P 500, Nasdaq, all of these have had big gains this week. But you can start to see, or I can start to sense and see, that especially in the sort of the technology stocks, Nasdaq specifically, that they're really, really sort of overheated. Not everyone, not all the stocks, but I think what you might start to see is once this stimulus package gets approved, you probably see a bit of a sell-off. And as things tie in with this stimulus package, and also with the vaccine rollout and the hopefully easing of restrictions around the world, I think you're going to start to see people shifting from the technology stocks, from the growth stocks, into the beaten down stocks that haven't done so well during COVID. So it could be like a double-edged sword, this one. It could be a case of once the stimulus package is finally approved, you get a sell-off. That then also could start shifting people and some of the big institutional investors away from taking profits on the growth stocks and starting to invest in recovery stocks, essentially companies like hospitality and leisure, aviation, companies that have been beaten down that could have some potential. Luckily, we've already invested in some of those, so we're quite well diversified. If I run through some of the stocks that we've opened this week, obviously last week I covered off that I'd opened a position in IAG, which is an aviation stock. There's a couple more that I've added to the portfolio, so I'll run through those now. So we're not completely switching the portfolio from growth to like recovery stocks and the like, but we are starting to see some opportunities which I wanted to make the most of. So yeah, so historically you can see that it's been bouncing off these trend lines, this trend line even, over the last sort of 12 years or so, and then obviously last year COVID hit and it's absolutely plummeted. If we zoom into where I'm taking an interest though, so this is obviously since March last year, we've seen a slight sort of recovery, with higher lows. So you can see here it's building up. Again, we've touched on here, and you can see the bullish move off of this sort of angled support here. And then the one that sort of caught my eye was this one here. So this was the week just closed. So you've got a bullish engulfing candle right on this sort of what looks like an ascending support channel. So this could be an ascending triangle. It could be just building up underneath this level of support, which could then break break higher. This is what we're looking for. You could also be if I zoom in a little bit, an ascending channel. So if I just put a line in here against where we are previously, so you can see touched on that here, got rejected, bounced off this. So you could see it break through this resistance level and then slowly ascend up. When it comes to trading, there's a sort of a saying that's quite well used, which is stocks take the elevator down and they take the stairs up. So perfect analogy here, absolutely flew through the floor, and then just slowly it's just stepping its way back up. So I just think as things start to recover in economies, the aviation sector has obviously been hit hard by COVID. So once these vaccines are rolled out and people and their pent up demand for travel and holidays and things like that recover, I think you're going to see some of the aviation stocks start to recover as well, which you're already starting to see. So it was a good opportunity to get in on this one. So bullish engulfing just off the ascending there. So we've jumped in on that one. Another one which we've opened a position in is Citigroup. Probably doesn't need much of an explanation. It's one of the big sort of financial institutions. So I'm just going to zoom in on that. Sorry, that's better. So yeah, just to give a bit of history on this one. Obviously, in the financial crisis of 2008, 2007, 2008, you could see it absolutely flew through the floor, and it's just been slowly recovering since 2009, and it's been respecting this sort of long-term slow gradient trend line, and then when we go into, when we zoom into it a bit, this was where we could see the impact of COVID, so it fell through the floor. Let's just try and make that a bit clearer, and then it looks like potentially it's formed a double bottom. So we've got a low here, which is then bounced from, and then we've got another low here, which is then bounced from, and then it's broken up over the last sort of few weeks above that trend line, that long-term trend line. And then what it's done, where we've become interested, is essentially it's broken through and it's retraced, tested that trend line, and then we've got this bullish engulfing, really strong bullish engulfing candle off of the trend line. So, you know, long term, this one I think could be a good play. Obviously, banks again were affected by COVID with, you know, obviously the economy's taking a hit, people not being able to pay mortgages, loans, and obviously the banks needing to keep a lot of reserve assets on their balance sheet. So yeah, they've taken a hit, and obviously interest rates have been extremely low as well. Not looking like they're moving anytime soon, but they might have to because of inflation. But yeah, this one I like. Potential double bottom, broken above trend line, held, bullish engulfing. This could move. This could just carry on recovering. So, you know, I'm not going to say that we're going to see it hit the 2009 or 2008 highs of 470 odd. What are we now? 62. So yeah, I'm not going to say it's going to hit that, but a pretty strong stock to hold long term. So we've added that one. Another one which we've added to the portfolio is Bank Inter, which is another financial services company. This one is a European one. So this one again looks like a fairly strong double bottom on this one. Let's just make that slightly bigger so you can see. Zoom in a bit. So again, broken down last year, made a new low, bounced off, hit that same exact point again, around about 3.1, strong reaction, and then it's broken above the neckline around about 4.6, and it's tested it and it's bounced off it, and then now we've got this sort of bullish piercing pattern where it's closed or it's opened above the previous low. So you see here it closed the previous week at 4.65. The next week it opened immediately at 4.7, so it's jumped up above the neckline and closed bullishly on that. So I think we could see this one potentially where we 4.7. So we could see this one move up to sort of around about the 6.5 mark, which actually would make sense because we've got an area of resistance around about 6.7, 6.6. So, you know, this one we could potentially see this one up in this area somewhere. So we keep that one in the portfolio. And then the final stock we've added, another aviation one. This one is Airbus, European or French aviation company. So again, this one has been before COVID was in a fairly sort of strong uptrend. Been bouncing around since 2012 off of this uptrend. Had a really strong move right before COVID and then basically fell through the floor again. And then again on this, it looks like you could see a double bottom here. So this low here, low cluster, and you've got another low cluster, and then it's broken above that, hit this trend line, and then you've got a really strong bullish engulfing candle here. So now that it's back on this trend line again, we could see this one lurching up back towards this support area of 109, 110 in the sort of midterm, I'd say. And it could even go even higher as the economy starts to recover. So yeah, so a lot of, from a technical point of view, a lot of similar moves, a couple of double bottoms, a couple breaking above trend lines, holding above trend lines, and then looking to resume. So I definitely think that we've added obviously a little bit more risk to the portfolio. Last week, I added an aviation stock. This week we've added 2 aviation stocks and 2 financial services stocks. So I just feel like eventually you're going to start to see a shift. You're probably seeing it already, a shift from the growth stocks, the technology stocks that have had a big run over the last 12 months into more sort of the recovery stocks. Once the economy starts opening up and recovers, people are already starting to get involved in those. So I think we're starting to see that already. So we're getting some exposure to those. So yeah, we'll see how they perform. So that's the portfolio update for the week. If you have any comments or questions on any of the trades or anything I've discussed, please leave me a comment in the comment section of this video, or obviously go over to my eToro page. You can post on any of my posts there. We can post on my wall. I've put a lot of analysis up this week, some a bit more detailed analysis on a few positions I've had open, including Coty and Salesforce, both of which are in our portfolio. So you feel free to head over to my page. There's a link in my description. If you did want to copy my trades, then obviously feel free to go to my eToro portfolio and click on the copy button. I've currently got about 7 copiers, looking to get that up to 50 by the end of the year, so quite a strong target. But all my copies are in green at the moment. They're all in profit, and we're moving in the right direction. So if you did want to come on board, then I'd be happy to have you. Obviously happy to answer more questions on that as well. Please, obviously, if you wanted to stay up to date with my analysis and my updates, my weekly updates on my YouTube channel, just hit the subscribe button on my YouTube channel, and that'll keep you up to date.